Most people think they own stocks. What they actually own are narratives. AMD is a perfect example of that gap. If you ask 10 investors why they care about AMD, you'll hear versions of the same story. Data centers, AI accelerators, competition with NVIDIA. A comeback company that finally figured it out. None of that is wrong. But most of it is incomplete. And when your understanding is incomplete, your expectations are fragile. So instead of talking about whether AMD is a buy or where the price might go next, let's do something more useful. Let's look at AMD the way a long-term capital allocator would, as a system that converts engineering talent, capital, and time into cash flow and optionality. Because that's what ultimately determines whether owning a piece of a business increases your freedom or just adds noise to your life. Start with the identity shift. AMD used to be a survival company. For most of its history, it was playing defense, thin margins, inconsistent execution, constant capital constraints. In 2014, AMD was generating roughly $5.5 billion in annual revenue with operating margins hovering near zero. Some years they were negative. That's not a business with leverage. That's a business trying to stay alive. Fast forward to today and AMD is a different organism. Revenue has expanded materially, but more importantly, the quality of that revenue has changed. Gross margins that once struggled to stay above 35% moved into the mid-40s, occasionally higher depending on product mix. Operating margins followed. That margin expansion matters more than the headline growth rate because margin is what creates internal freedom. A company with 5% operating margins has no room for error. A company with 25% margins can make mistakes, reinvest aggressively, and still compound. This is the first mental model most people miss. Growth without margin is just motion. Margin is what turns motion into trajectory. AMD's real inflection point wasn't just better chips, it was better economics. Higher average selling prices, better product mix, and a focus on markets where performance per watt and total cost of ownership actually matter. Data centers, enterprise CPUs, and now AI accelerators are not consumer fads, they are budget line items. Once you're inside those budgets, revenue becomes stickier and more predictable. But predictability doesn't mean safety. Here's where the second layer comes in: capital intensity and competitive pressure. AMD doesn't manufacture its own chips. It relies heavily on foundries like TSMC. That's a strategic trade-off. On one hand, it avoids the massive capital expenditures required to build and maintain fabs. Intel learned the hard way that vertical integration can become a financial anchor. On the other hand, AMD is exposed to supply constraints, pricing power from suppliers, and geopolitical risk. From a systems perspective, AMD has outsourced capital risk in exchange for execution risk. That's neither good nor bad. It just means the company's profit margin is partly a function of external discipline it doesn't fully control. This matters because investors often project linear outcomes onto nonlinear systems. Take AI, for example. Let's say AMD grows its data center revenue from $6 billion to $12 billion over several years. That sounds incredible. But if pricing pressure compresses gross margins by even 300 basis points during that expansion, the incremental operating profit might be far less dramatic than the revenue chart suggests. Revenue excites people, profit compounds wealth. Another mental model: optionality versus dependence. AMD's competitive narrative is often framed as catching NVIDIA or taking share from Intel. That framing is emotionally satisfying but strategically shallow. AMD doesn't need to dominate any single market to succeed. It needs optionality across multiple compute workloads. CPUs, GPUs, custom silicon, adaptive computing through acquisitions like Xilinx, these are not random bets. They are attempts to reduce dependency on any one cycle. When gaming slows, data centers may accelerate. When consumer PCs stagnate, enterprise refresh cycles kick in. Optionality smooths cash flow, and smooth cash flow lowers the psychological baseline for management decisions. Companies with volatile cash flow make defensive decisions. Companies with stable cash flow make strategic ones. Now let's talk about valuation, not numbers but logic. Most people treat valuation as a scoreboard, expensive or cheap. Professionals treat it as a set of assumptions. When you own AMD at a premium multiple, you are implicitly assuming sustained margin discipline, continued relevance in high-performance compute, and management's ability to allocate capital without overreaching. If revenue grows at 10–12% annually but margins stagnate, returns will disappoint. If margins expand but growth slows to mid-single digits, outcomes can still be strong. The point isn't prediction. It's alignment. Your expectations must match the business model's realistic output. This is where many high-income professionals get trapped. They understand compounding intellectually but ignore base rates. They assume exceptional companies always produce exceptional returns, regardless of starting conditions. That's how you end up owning great businesses with mediocre outcomes. AMD today is not a turnaround story. It's an execution story, and execution stories demand patience and humility, not excitement. Zoom out even further. Semiconductors are cyclical, capital-intensive, and brutally competitive. No company in this space compounds effortlessly. Every gain attracts response. Every margin expansion invites pressure. That doesn't negate the opportunity, it defines it. Owning a business like AMD is a bet on sustained relevance, not dominance, on adaptation, not inevitability, on management's ability to navigate cycles without destroying long-term economics. So the real question isn't, is AMD a good stock? The better question is, does this business model fit the role you need it to play in your portfolio and in your life? If you're looking for short-term validation, AMD will test your emotional discipline. If you're looking for a long-duration asset that participates in the compounding demand for compute, it may earn its place, but only if you respect the assumptions you're making. Freedom comes from clarity, clarity about what you own, clarity about why you own it, and clarity about what must be true for that ownership to actually improve your long-term trajectory. Most people never do that work. They just follow the story and hope the math works out.